Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is February 18, 2022, and today is Friday morning. So looking at the highlights of the day, the Dow Jones and the NASDAQ tumble once again. That's twice this week. But first, no major economic events scheduled for today. But as we look at the various markets, starting out with the Forex symbols, we're watching the major pairs strengthen versus the US dollar, while we're looking at the indices, the Dow Jones and the NASDAQ tumble again. And looking at commodities, gold strengthen and oil sells off, okay? Inverse relationship there. And looking at the stocks, Cisco gaps up while the rest of the market really sells off. And lastly, looking at Bitcoin tanking to support. So let's take a look at the markets and see what we can expect from today's trading. So we're going to start with the lagger here, the one that goes up the least, and we're looking here at the Euro USD at a 4-hour chart in a really tight range here at 1370-ish level to 1388. Really tight. Nothing really doing here, but it's inching higher, okay? Altogether, it's inching higher. But when we look at the GBP and the Aussie USD, you see something different. 4-hour chart, you see it back on its highs, okay? This is resistance-ish level, so if we do break higher, it might mean that the Dow Jones will go down further, okay? This is an important level for it to break higher if it does, okay? If it does, then we could be back to that 137 level, okay? That's for sure. Now looking at the Aussie USD, having employment numbers coming out the other day, and it's back on its resistance also. So the one that's the lagger here is obviously the euro, but altogether you see that the dollar is getting weaker versus the major pairs, and that may mean that the Dow Jones is getting weaker as well. Now looking at the commodities, first looking at gold on its highs, 1891. That's a weekly chart. Look at that. Okay, it's at that second resistance. 1900 is that second resistance. We mentioned that yesterday. So do be aware of it. I don't know if that's English, but be aware of it. 1900, if it doesn't clear, okay, it doesn't break higher, then we're going back down. Okay, that's going to be clear. Now, looking at crude oil, trickling down a 4-hour chart, you can see it's trading even below the 8-day moving average, which is a closer average. Looking at the daily, we're still hugging it. Okay, at the 8-day moving average, not breaking particularly lower. But remember, we haven't been in this area since December 23rd. We've been on an upwards momentum. And that's really a key on for the next time you know. And this is why it's so important to just use moving averages. Okay, look at it. It completely just held the 8-day moving average. Now it's actually having the first time where it's really having a hard time staying above it, which may mean we might see a slight correction. Now looking at the big board, the Dow Jones trading at 34,400. It bounced to 35,000, but then petered out. So it's a decent move on the downside, okay? If you did catch that second downside from 35,000, that wasn't the major play. There is some weakness in the market. Okay, you see that the market is cross trading. Okay, it's not going higher, but it's not necessarily going lower. And we're at that stage where, which way are we going? Okay, now when we look at Cisco yesterday, Cisco did get a gap up. Look at that. Cisco is one of the largest networking companies in the United States. It is a bellwether, meaning it is a company that tells us the direction of the markets. It's really very important to give us that perspective. So we're at that resistance and we're selling off. Okay, so this doesn't look like it's a gap and go. It looks like it's going to fill in the gap. Okay, so that's something to consider because it's got resistance at this $56. Okay, look at that. I mean, we've been down from $64. That was the high. Okay, $64. Just so you know, that was the high. That was the all-time high back, okay, in 2002. Okay, so this is really a very important level for it to be in. That's a previous resistance, subsequent support. So this is really very important to keep this on the radar going down the line. Now, Apple sold off yesterday. Facebook also considerably selling off, breaking that supportish level. Okay, that's really important. Microsoft also selling off to the bottom of the range. We do like we're getting a bounce. Question is, will it just give us a short squeeze and then we're going to sell off again? So that's something to consider as this is continuously going. Amazon also sold off last week. Tesla and JP Morgan selling off. Now lastly, looking at Bitcoin, take a look at this. We couldn't clear 45,000 and what happens? We go back to our support level. We're trading right there at 40,600-ish level. That you could say it's still support-ish level around this area. If it sustains here, then we could still see it bounce. If it doesn't, then we're going lower. It's very simple. It's just as easy as ABC when you see it on the graphs. This is Fred Razak. I want to wish everybody a great trading day. Thank you.